welcome everybody. So may I get our main speaker really to share his screen first? Yep. So welcome to the 2022 landed market results and outlook for 2023. So our main speaker is Willie. He's the head of the Huttons landed division and has an honors in business from NTU. He's also a certified ACTA trainer and has more than 12 years of real estate experience in Huttons since 2012. He has also founded the Huttons landed division, which is one of the most prolific landed teams in Singapore. And it's a multiple award-winning producer and leader. So next slide, please. Yep, so he has also been featured in HProp, and he's also known as the Landed Prince. And you can also look up the article on HProp. The title is Landed Prince, Scaling New Heights. So without further ado, I'll pass the time over to Willie to share on this Consumer Connect. Sorry, Willie, you're muted.
Good evening, everyone. Can you hear me?
Yep, can.
Okay, thank you. Good evening. I hope every one of you have had your dinner. Thank you for attending our quarterly webinar that's conducted by Huttons Landed Division. It's the start of the year. I hope you're as excited about the new year as we are. Right? Of course, later we're going to share some very exciting insights. But before that, I just want to introduce my fellow management team, my teammates who are here today. All right, they are respectively, basically, I have Michael here, who is in charge of District 16. I have Cindric, who is going to present District 21, 23. I have Will, who's in charge of our Central Region, District 10 and 11. Jason, District 13, 14, which is part of the East Region. Sean, who is in charge of District 19, 20, 28. And the only absentee today is Justin, because he has gone back to celebrate Chinese New Year. All right, so without further ado, I shall start. And by the way, there's a chat box, if I'm not wrong. If there's any questions, you can feel free to ask at any point of time. All right, so we have, again, like previous webinars, more than 100 plus slides, so we try to be as productive and as succinct as we can. All right, so okay. So one thing to take note, this is a Huttons Landed Division. There are 4 QR codes here. If this is the first time you're seeing this, you may just want to screenshot this. If not, basically, there are the links to our various social media platforms, from our website to Instagram, Facebook, etc. And we also just launched our TikTok channel recently only. So you can, for all our channels, you don't have to worry about these links. You just have to search Huttons Landed Division and you'll be able to find them, right? So like what Keith has said, this is not new. We have actually done extensive research into the market since as early as 2017 and 18. And I think, I believe from 2019, we started to launch a quarterly reports, right, on the landed market. This is part of our belief that in order to serve our clients better, whether you're a buyer or seller, I think it's very important for us to understand the market, all right? And after understanding it, I think it's taken us a lot of joy to share this. Of course, individually, we have done so with our clients, but I think what better or more efficient way for us to do this on a mass basis. All right, we started with reports on Facebook, and then from COVID onwards, 2020, we started to do this consumer webinar. And this is, let me count how many. This is our 10th all right, installment. So the last one we did was 3 months ago, all right, 3 months ago in October, just at the end of Q3. Around 14th of October. So for, I think, the last 2 to 3, we started to record them and actually put it on YouTube. So we have missed them. So you can just scan on this QR code or just go to our YouTube channel, go under basically a playlist, look for consumer events, and you'll be able to find all the previous consumer webinars and other consumer events as well, right? So that's for the last one. Now, before I begin, same disclaimer. While Huttons Landed Division has taken our part to ensure that all the information is correct, all right, as at 15th of January, all right, we literally just finished all the reports as yesterday. Why we did so is because the numbers were run, all right, There are some transactions that we captured in December, for example, that we captured only in the first few days of January. So we try to take the most updated one as much as possible. But even so, this is basically sharing information. While our views will be presented, will be shared, we hope you understand that, of course, we will not take responsibility for any action taken or decision taken on our side, all right? So next, okay, first question I think before we start is if you could all share with us, now we have about 70 plus of us, is this the first time attending this, your first time attending this seminar, right? We just do a quick 1 minute poll. Oh, sorry, I just launched this. Yeah, thank you. Just take a couple of seconds, just let us know so that we know how many are actually new clients or new followers. We know this is a Chinese New Year period, so we really appreciate a lot of you taking time off. I think my team here as well. After this, we have to go and do a lot of Chinese New Year errands. But otherwise, if you wait after CNY, it'll be too late, right? A lot of you want very updated information. Okay, as of now, wow, I can't believe this. This is about 50-50, all right? 50-50, 49, 51. So some are new, some are repeated. Thank you to either group. Okay, so just let's have an idea. What is the mix among all of you? So if it's the first time, just you will find, I think the information might be a bit overwhelming. Just pardon us, because it's really a lot. To be honest, the full report is almost double the duration, all right? So we try to make it as efficient and also make it as concise as possible. If there's any questions during or even after that, feel free to consult any of the Huttons agent, or if not, my colleagues from Huttons Lender Division, all right? They can either answer your questions or they can forward to us to answer. Okay, so this will be the flow for today. Again, very ambitious. We try to cover as much as we can, starting with the total landed market overview. All right, and then we will go split by region to have a more concise, in-depth look at the various regions and the various districts. And then we have the Q&A. This is something new. We actually slot in one more Q&A because in the previous sessions we have feedback saying that there's no time actually to ask us, all right, to pose any questions. So we will insert that to have a break, and then before we go to the outlook, all right, in 2023. Okay, so let's start with a full year landed market overview. If you don't have a glass of water beside you, I strongly suggest have it, and if you have glasses on, reading glasses, because there'll be a lot of numbers, all right, coming up. Let's start. What do you think 2022 was, all of you? Of course, those in the team, those who are active in the market, or if you're actively buying or selling, actually in the last couple of months, you would have felt, all right? We have some buyers who just joined. They have not, they have been searching or they've been active in the market for the last 9 months to a year. They will be the one in the first-hand experience tell you how the market has taken off, all right, in more ways than one. So let's take a quick look. So the first chart I'm going to show you is the transaction and volume and value. Now, this one was the last one, not last one. Actually, we split this down by quarter, all right? Split this down by quarter with both value and volume. So if you can take a look at this, we ended the last webinar at Q3. So at that point of time, you can still remember for those who joined us before, we already predicted a drop in the volume, all right, in the volume. Because that was the start of the cooling measure in September, and of course we have the year-end season as well. All right, but what did not catch us by surprise also is that price continued to rise. All right, you can see now price have risen in this quarter 1770. This is the highest ever. This is a new record, right, per square feet, and there's an increase of about 2% versus the previous quarter. And volume of yours, of course, is dropped versus previous quarter is about 40% versus last year. Just for seasonality is about 60%. Now, one point to take note about the terminology in terms of how we derive the numbers. All these are real-time numbers derived from URA, and because there are certain different types of indices that you may read in the market, but ours is purely from URA. And instead of taking like median prices or PPI, we actually take PSF. All right, PSF, because it's a lot easier for us to digest and understand. Okay. All right, hope this is clear. So how does this translate in terms of the full year performance? What I'm going to show you now is basically the landed market for the last 10 years. I'm going to pause a bit for you to look at the chart. So you follow the blue line. Now this is basically the price, okay, the price trend. After the peak, the last peak in 2013, price has started to drop for about 3 years, and after that, from 2016, it has had a steady incline. Increase until 2020. This is what we've experienced, right? It's not new in the market, and it has been increased successively for the last 2 years. So what is resulting? You can see now prices hitting from the usual 1,002 to In 2020, it crossed, is at 1,1350 around the mark, and then it started to hit about 1,005, and now we are almost reaching $1,700 per square foot on average. All right, this makes an increase of 12.8%. Right, 12.8% after another 13.2% increase in the previous year. Okay, volume-wise, this year we already started to feel this since actually, in fact, last year, if you remember, those who attended the webinar, we already projected a drop because what happened in 2021 is really unprecedented. There's really multiple factors coming together. All right, we call it basically you have all forces are turning into helping the market for not just for landed but for other segments of the market as well. All right, so we know that was this runaway success. It cannot be repeated this year, and true enough, now it has dropped by almost 50%. Right, almost half now is minus 47%, back to a more average value of 1,600 units. Okay, so you have fellow agent friends here. If you felt last year was slow, so to speak, you should not feel surprised because the market has really gone back to the normal, right, pre-normalcy. If you have read my recent interview. Okay, so by the way, I want to take this opportunity to also fact, I think despite this, Huttons Landed Division has, in spite of this, actually transacted more, okay, done more transactions last year versus 2021. So for that, I think me and my teammates here and my team of leaders are all very proud of what they've done. Okay, so let's move on and see the summary. All right, so what does the numbers 12.8 and 47%? You just take a look at this. You've got to split down further. How can we dissect this? All right, how do you understand this? Where has which area contributed to the increase or the reduction? First, let's take a look at house type. Okay, house type. So among for the 12.8%, you can see that the main growth actually comes from terraces. Right, comes from terraces. Of course, inter-terrace having smaller land, naturally will have a higher per square feet. All right, naturally have a higher per square feet. Even though the gap kind of closed in 2021, this gap starts to widen again in 2022 with inter-terrace hitting a record high now of almost $1,800 per square feet. Okay, so if you are a first-timer looking, that means you are a condo upgrader buying your first inter-terrace, all right, inter-terrace, especially the freehold 999 ones, do not be surprised or alarmed if you see asking prices are now at 2,000 or above, okay, because what has been transacted last year is almost 1,770, and among the three, this is the house type that has increased the most at 13.9%. Okay, we see this actually coming from a overflowing demand from 2021. A lot of upgraders are still going for inter-terrace, all right, inter-terrace, and because of them being smaller, I think the per square feet rise is also higher as well. Okay, next is let's take a look by volume. Right, by volume wise, the house type that actually performed the best is actually semi-D. The best, I think, relative, right? Relative. Of course, all three have dropped. They're actually pretty close, so there's nothing to be alarmed and nothing to be surprised about. But basically, detached is the one that dropped the most. Okay. And then between the freehold 999 versus the 99 years, you can see the freehold 999 retains the in terms of value-wise, it has increased. But what is surprising is that 99-year properties has actually gone up more, all right, than the freehold 999. We ourselves have also transacted quite a number of 99 years, and the common so-called feedback that we got was these are mainly from condo upgraders, and they find that the freehold ones are beyond their reach. All right, what used to be under 4 million, I think a lot of freehold properties or inter-terrace sold last year are at 3.8, 4 million, or even higher, depending on where you are. All right, so for some of these upgraders who are just selling their condos for like 1.8, 2.2, they decide to go for 99 years instead. It's a lot more palatable, right? For volume wise, you can also see 99 years having a sharper, less drastic drop, which means that in terms of volume and transaction, the demand for it is actually relatively higher than the freehold and 999 ones. Okay. Another way for us to take a look is to dissect this is to take a look at new and resale. Obviously, resale contributes to the bulk, so there's no surprise that the numbers are more aligned with the total landed summary. Okay, but for new ones, actually numbers didn't decline. In fact, actually for -8%, this is actually one of the best performers. All right, because there's still a lot of demand for brand new houses, those that are built by developers, because this saves a lot of buyers, a lot of time. especially when some of these launches were actually the land were acquired 1 or even 2 years ago, right? That means that in terms of the land price, it has been partially absorbed by the developers. Okay, and of course later we'll talk about like the increase in the construction costs as well. All right, so whether this trend will increase this year, I think we are less hopeful, because I think a lot of developers, if you are listening here, thank you, and they are all looking around, just like actually condo developers as well. I think land bank is running low, so a lot of the developers are also looking to replenish their supply. Okay. Another segment that we can look at is basically strata landed. Although the numbers we're going to present later do not include strata, all right, it's mainly landed. So because that is a more like-for-like comparison, because strata, as you can see, even at the peak in 2022, the PSF per square feet is still less than 1,000 per square feet, because they actually divide by the usable space instead of the land area. All right. For strata wise, similar reasons to 99. We always compare the 99 to strata together, because when you find people who are affected by affordability, the first two options that they always go to is 99 landed, or if not, it can be freehold or even 99 strata landed. Okay. So that's where we put them side by side. All right. I give you a couple of seconds, take a look. You can screenshot if you want to. Don't worry if you need to revisit this, because later after this, we're gonna go down even deeper. Okay, next. The next few slides, I am going to skip. This is from basically previous feedback as well, all right, because they are quite simple, because they have been summarized here already, right? The next few slides is to elaborate from here onwards. I won't go through too much, but just let you know what we have, so that you can go to your agent or your consultant, all right, to get the slides. So we have seen this before. I'm not going to go through, but if you are curious to know what's the trend of like detached, semi-D, inter-terrace of the last few years, you can take a look. Otherwise, the final numbers here are already reflected in the summary. All right, but basically these three, the trends are pretty similar. There are only a couple of years where you see like detached actually surpassing. For example, like 2016, detached surpassing semi-D and very close to terrace. Otherwise, they do have a distinct difference. Okay. And then this is volume. So no surprise, as long as everything is going the same direction, there's nothing to be alarmed, right? Next will be freehold 999 versus 99. Do slow me down, put in the chat group so that my team can highlight if you want me to slow down. Okay, so this is freehold 999. I'm doing this so that we have more time to elaborate on the rest later. This is landed versus strata landed. Okay. So in case you are staying a strata landed or any of this house types, you want more details, just feel free to let us know. Okay, this is new versus resale. Right. And this is the resale houses, minus 47%. Okay, what is interesting now is, especially where you are, I don't know which district you are staying in or which region you are staying in. Talking about regions, by the way, after Land Division, the way we understand or dissect the market is by three major regions. We have the East region, Northeast region, as well as the Central region. I'll go to each of them quite quickly. All right. So let's take a look at the price. Now here is where we can pause and take a look. So these are the four regions: Central, East, Northeast, and West. All right. So Central, you have 10, 11, so on and so forth. So understanding, if you can remember, the total island-wide increase is 12.8%. So no surprise, all the districts have increased in terms of price, right? So you can see here, we have two districts now crossing $2,000 on average for the first time, and that's District 10 and 11, right? 10, 11. Not only in the Central region, you see other districts all reaching new highs. For example, 13 is almost at 1,008 per square feet. District 15 is always the next most premium alternative out of Central region, is almost at 2,000 per square feet. All right, and then you have also District 20. All right, a very surprising jump. Now it's almost 1,850 per square feet, and District 21 at 1,008. So you can just see one glance here, almost half already crossed 1,008 per square feet. All right. Next will be, let's take a look at which one has the highest increase. So the top three performers in terms of district, in terms of price increase, we have District 19. First one is actually District 21, right? District 21, one main contributor to this increase is that a lot of the there was actually newer houses sold, and there were actually a couple of launches. When I say launches, they were actually launched in 2019. They were actually resold again. And you can see all these transactions here are 1,000, less than 1,005. They were actually crossing 2,000 per square feet, quite a number of them. All right. So which contributed to District 21 having the highest or fastest growth among all other districts. The next is District 28, right? District 28 has a couple of this a 99-year landed. Same thing as well. Remember, there's a Belgravia, name collection. All right, they were actually launched also 2-3 years ago, and quite a number of them has actually changed hands. Not forgetting there was also Luxus Hills and other newer developments that actually are big developments. So their transaction actually contributes to a big part, right, of this. So even at 1,005 now, to be honest, if you go to any of these new launches that I mentioned, you can't even get this. They're all above 2,000 per square feet. All right, so that's District 28. Again, these two are, if you notice, these three are basically the so-called popular among the upgraders, okay, because nearby them have a lot of condos in all these three districts, right? District 19 will be the third one. District 19 has always been popular, still the number one in terms of transaction volume. And last year we continue, all right, to see a lot of upgraders going to buy District 19 inter-terraces. And inter-terraces, later you will see it contributes to a big bulk, okay, of the PSF increase. On the other side, flip end, which one grew the least? So we have District 10 and District 23. Let's take a look at 23 first. District 23 is basically at further up at the upper Bukit Timah side. So you will have areas which are unfortunately, perhaps not as familiar or not as sought after as some of those properties that's closer to the central part of Singapore. At the same time, District 23 has I think one of the highest proportion of 99-year landed properties. So while there's still an increase, you don't see the increase as drastic as the other districts with more freehold properties. All right. Now let's come then to we call this the grand name of basically landed properties, District 10, right? District 10, while still a respectable increase of almost is more than 8%, it is the lowest, I think, because of a couple of reasons. Later we will explain. One of which is the fact that actually a lot of the houses sold were slightly older. All right, they were slightly older. That requires actually more redevelopment compared to 2021. If you ask any agents active in Bukit Timah, they will tell District 10, they will tell you the better houses are also in 2021. All right, of course, it's a sweeping statement, but what is true, because what we have left in 2022, a majority, or should I say a larger proportion, are actually older houses, hence attracting lower PSF, all right, compared to the new ones. So coming to this, we have to understand this is just a number. Even if I just look at 2133 for District 10, we have to understand that there are different parts of District 10, and this is PSF based on land. There are other factors such as the built-up area, how new it is, number of rooms, etc., etc. All right, so we try to dive as deep as possible, but just take note this, take it with a basically holistic approach, and there's a lot more factors for you to consider. All right, whether you are looking for a house now, you see something that's higher, or you are selling now, please have bear in mind, we have to delve a lot deeper to looking at basically the specific streets, the conditions, spacing, etc., etc. Later on, if there's time, I'll elaborate to you. By the way, if there's a bonus section towards the end, okay, if you can wait till the end, we are going to show you for the first time, all right, to the public, what we have inside our website, okay, if there is time. I don't want to say it's going to blow your mind, but it has at least captured our hearts for the past many years since we developed the website. All right, and then you will understand what it means by the many factors that will affect price. Okay, let's proceed. So this is for price. Let's take a look at volume. Okay, again, what is new here is that unlike price, we can actually group the volume, all right, by regions. Right, these are the various regions. Let's take a look at the numbers here first. All right, at the bottom. So with you can see all four regions have after balancing of different districts are more or less equal. So there's no upheavals of any sort across the different regions. All right. So what we see in Singapore, the phenomenon is quite well spread across the different regions. Now, if you take a look closely at the districts wise, all right, you can see that the numbers are a lot closer, or deviations less compared to the value increase. So, which means that actually the general drop in volume or transaction volume is felt across almost all the districts. I forgot to mention, by the way, that these 11 districts, they were chosen to be shortlisted, not just for presentation sake, it's because they actually make up about 70 plus to 80% of all transaction volume in Singapore, of all transactions in Singapore. That's the main reason why Huttons Lending Division decides to focus on this 11. If you are not seeing any of this, they fall under the non-GTA, right? Doesn't matter, we still can look into them as well, all right? Now, looking at these numbers, so you can see here that the top performer or the most popular in terms of transaction volume is still District 19, all right? Even though it has fallen from the peak of more than 500 units, I think this is the highest ever for any district, all right? For any district in a quarter, all right? Now it's about 200 and, sorry, not in a quarter, in a year, pardon me. And this is now almost half at 282. Then the next most popular is District 15 at 200 units, right? 200 units. Next, you have a couple that is in the 100 range, 100 plus range, like District 16, District 20, 28, and District 10. Okay. Now let's take a look at what has dropped the least. Okay, what has dropped the least? First district to take note is District 11. What is interesting, okay, with 10 and 11, they are like brothers, and sometimes they are also foes, okay, to a certain extent, because despite the fact that majority of the district is divided by just Bukit Timah or Danyan Road, we see a change in fortunes in 21 and 22. So basically in in 2021, you basically, to summarize, District 11 was District 10 was the start. Okay, a lot more GCBs were sold, a lot more detached houses were sold. So, for example, in this 2022, even though GCB volume has dropped, but we actually see a 3 times fold, right, in GCB transactions in District 11, all right, in District 11, 3 times. Later I'll let Will elaborate to you, all right. Why is that so? It could be because a lot are already sold in District 10, and maybe because there are also more houses coming up in District 10, 11 as well for GCBs, okay. Of course, by the way, when we say the transaction is not just GCBs, but other types, but it's the GCB part that actually caught, I think, my attention when it came up. District 23, okay, you remembered it as having quite one of the least price increase because of 99 years, right? For the same reason, actually, yes, the volume increase actually helped by the fact that there's a lot more 99, more affordable for upgraders. So it's actually the best performer, even better than 11. Okay, so non-GTA will be the rest. So strangely, interestingly, of course, these 11 districts, by the way, they tend to be more expensive than the others, like District 5, like District 18, for example, in Changi, or even District 26, right? But you see a lot of upgraders going to these districts as well. Hence, the performance is slightly better. Okay. Now let's take a look at some of the worst performance in terms of volume. So we first have District 21, right? District 21. So this one is basically at Upper Danyan, and then you have at Upper Bukit Timah, Toi, Toh Tak side. Okay, so we see a drop here because mainly in 2021 there are more new properties launched. All right, though a couple with Cindric will share with you later. All right, we do see a drop in actually also supply of better houses there as well. All right, so later Cindric will share with you. Next will be District 10. Okay, District 10, like I say, is a reversal now. District 10 in the last year, what happened was we find there's really a severe shortage of houses that comes into the market. All right, or they were sold quite fast in 2021, and those that comes out may or may not be. And generally speaking, we also feel that there's quite a big price disparity between, I think, sellers and buyers. Hence, the volume is the drop is more drastic. Okay. Let me just hold this slide for maybe 1 to 2 more seconds so that you can screenshot this. Again, many of these lines can be expanded a lot further, all right? The first expansion or the first elaboration will be done in the next section, which is the highlights in the various regions and district. So we're going to organize this, and of course, this will be the speakers. Let me just highlight to you again, and then we will start with firstly the East region, right, which is 13, 14, 15, and 16. So starting with District 13, I shall invite Jason to come and share with us.
Hi, good evening. I'm Jason here. Yeah, okay. Once again, I'd like to share with you. I think for those who have actually the first time, again, like what Willie mentioned, Just a quick brief on the how we split the district. You can see Brother, McPherson, Garden, and this Sinet. These are the four main area. Okay, mainly contribution from Brother and Sinet. There'll be a lot. You'll see from the next slide. Okay, this is one of the highlights for the number one. We are talking about the significant price increase in PSF for terrace. As you can see, the price in 2021 generally is we used to hovering around 2.93, the kind of thing, the kind of pricing. From 2022, you can see the average price have gone up to 4.1. And it's almost like shoot up 36%. That's a lot. Yeah. And compare, and also at the same time, we are also looking at the PSF. As you can see, the PSF also shoot up. It used to be 1.4, 1.6. You can get it something in McPherson, and generally go up to 1.8 PSF, 1,008 PSF. And some even go to as high as 2,000. In fact, certain units are going even higher at 3,000 for those smaller units. Yeah, and generally contributed from this Brother and Senior Estate. Next to share, you will see again, as I mentioned on the terraces, the price. We also see something which is quite a lot of demand. As you can see, terraces less than 1,006. Most of the region, we are seeing terraces above 1,007 or even 2,000 or 1,009. But in this estate like CNET or McPherson Estate or Garden Estate, we are seeing a lot of them still less than 1,000 or 1,006. As you can see, for this slide, it's generally less than 1,000. So most of these are the three houses we are seeing transacted. Actually, the PSF is less than 1,000, and they are transacted above 2,000 PSF. As you can see, this is even higher, 3,000. So the next again, you're seeing this slide. What we are seeing, the PSF for this one is 1,005, is still less than 1,006. Yeah. So we are seeing this one. So, okay. Hold on a minute. So for this slide, we are seeing actually general is still below 1,006. So today we are seeing about out of 37 units, almost about 50%, 1,000, I would say 1,015 units closing with around 1,006 PSF square feet size. Next highlight I'd like to share was the price. As you can see, the average price range is 2,021. We still can find something like in McPherson Garden below 2 million. As moving forward, you are seeing in 2022, it's only 3 units at this what we call below 1.9, below 2 million. The rest we are hovering around 2 to 5.99, almost 6 million. So as you can see, like what Willie have mentioned, generally price went up. Yeah. Okay, let me see. Yeah, that's all for me to share for this District 13. So I move on to District 14. Again, on District 14, just a quick outlook of how we split the District 14, mainly Kembangan Estate, where the what we call Kembangan MRT Station, Eunos, and Geylang. So these are the three main. The majority closing or rather transaction fall on Kembangan and Geylang. Okay, highlight number one, as we have actually always mentioned, yeah, I mean the whole slide from so-called Willie have shared so far. Transaction drop, which is nothing, I mean for Kembangan, is still for the what we call D14, is still drop 55%. Majority we are seeing is actually the detached, which hit the most, dropped by almost 75%. So it's only 4 units overall for 2022. That's the lowest, yeah. And second highlight I'd like to share, okay, we see that actually there's a sharp increase again on terrace. On terrace in terms of pricing and in terms of PSF. As you can see this one, okay, on this slide. Okay, 2021, same for terrace, average price, we are looking at 3.3, 3.4. And to date, we are shifting, we are going up, shoot up to about close to 4.13, almost 23%. And same thing for the PSF. As you can see, it goes up almost 20% from 1,005 to 1,008. Next to share is the average PSF. Today, as you can see from the slide, okay, it used to, for this D14, we're still seeing previously still about 1,004, 1,005, a lot. But from the 2022, almost 1,007, and you can see the weightage is almost like 40% out of this, what they call the general, between 1,004, 1,003. So the range you can see 1,007 to 1,009, from 4 to 9 unit to 9, and for the more than 2,000 actually increased a lot. So this is actually, yeah. Okay, so I've shared mine. I'll pass to District 15. Yeah. Oh, sorry, there's one more slide. Huh? Quick one, sorry, I missed up. This is another slide. Just to share, this is another slide, the third highlight for this sharp price increase on average price for 1,007, PSF from 1,007 to 2,000. As you can see from the examples above, we are seeing almost most of the I would say generally terrace, all the terrace, the price have actually shot up, especially this one. One of the main reason was, as you can see, yeah, give me a minute. Yeah, one of the main reasons for this to shoot up is because this is brand new, almost, I would say TOP just for probably about 6 years. Yeah. Okay, thanks a lot. I'll pass to District 15.
Thank you, Jason. Good evening, I'm Michael. I will cover District 15 on behalf of Justin, followed by District 16. Where are the landed area in District 15? You can see the map here on the left is Condo, and to the right is Huttons. Total is next to it, where all the lorongs are from lorong G to lorong O. And on the extreme right is a Siglap, which is a relatively big area, a little bit undulating because there's some hills there. Let's look at some of the key points here. For the whole of 2022, we saw an increase in the transaction of 3 million and above. As you can see, 2022, 95% of the transactions are above the 3 million mark. And if you look further down, we have an increase in terms of transactions for houses that is 8 to 9 million, 21 physical transactions in fact. And right at the bottom, you can see it even hit the 20 million mark, right? A good 5 transactions, which actually account for the transaction value of property in District 15. Second highlight here is that there is actually a sharp increase in detached prices. As you can see from the bottom, it has gone up from 10,000, from 10 million to 12 million, a rise of 16.9%. And this is attributed to area in Huttons and Huttons, where transaction take place as high as 15 million, which is something new. And in terms of PSF, the area that actually command is actually the Huttons. And if you recall earlier, if you see the earlier slide shown by Willie, that on an average, the PSF value of district 15 is 1,009, which actually is a very good, very high value. In the whole island, I think there are only 2 districts that hits above the 2,000 PSF. That is District 10 and 11, and District 15 is third on the lineup. These are some examples that we have collected, right? Transaction of houses, detached houses, and the value, as you can see, all above the 2,000 PS mark. The land area of these detached are not really big. It's about 4,000 over, but yet when it comes to prices, it goes up plus the high PSF. And the third highlight here is that if you look at the charts down here again on PSF, we are having quite an instance in terms of percentage-wise weightage. 39% of houses are transacted above the 2,000 PSF, 40%, and that is quite substantial. Right, that is something that we have seen in the District 15. Shortly, I will share with you District 16. You can see the comparison between these 2 areas. Right, District 16, where is District 16? We actually have got 5 areas down here. Standard Lucky, which is north of the Bayshore, and to its right is Q Drive and Limau. Now, this area has got a mix of freehold and leasehold, and it is one of the areas that has got the most transaction compared to all the 5 in every quarters. To its right is Eastwood and Vidocq. The landed house here, majority of them are leasehold. And on the north is Tanah Merah, Kechil, and Peakville, north of Tanah Merah MRT. And on the extreme right, that is the northeast, the Guan Sun Sunbird area. It is much closer to Sydney MRT station. Now, what are the highlights in District 16? In line with the overall drop of reductions of 47%, you can see, right, transaction 126 account for 47, but the PSF as well as the price actually has gone up. You can see from here, from 2021 to 2022, an increase of at least $500,000 in terms of value. In terms of PSF, again, 2022 is by far the highest, right? It was 1,002 in 21, but 2022, 1,346, and this is the highest in the history of the 616. Increase in transaction 3 mil. As you can see, our increase down here, if you look at it, weightage-wise, 2022, 78% versus 2021, 21%. And a closer look at the 22 figure, you'll find that we also have got transaction 7 to 8 million, which is at the high end. And for the first time again in 2022, we have got transaction that is above the 10 million mark. And our 10 million mark is actually the average of what the District 15 is, right? So different location has got a different price value. The last highlight here is that there was this substantial increase in prices in terrace. As you can see, in 2022, the average is 3.3 million. Just for sharing, the whole of 2022, the lowest transaction of terrace house is 3 million. So you're not going to get houses that is below the 3 million mark. For the next work year, probably the price will retain or even improve further. PSFY, terrace actually has contributed to the overall percentage of transaction, as you can see, from 1,003 to 1,005 on the so-called percentage increase 12,009. Another observation, just a minor one, you see there is actually a red color there. There is a decrease in area where we have Eastwood and Bedok real area. Price decreased slightly and PSF also slightly. This is probably due to that the majority of the houses there are actually leasehold. And as you know, leasehold, and as the price, as the years goes on, the price go down. So one one so-called advice is for those potential buyer, you may want to consider buying a freehold or 999, where you can retain the value of the house. Okay, with that, thanks very much. I shall now pass on to Willie.
Okay, thank you, Michael. All right, we have some comments about going back to District 15. Sorry, for, I think, was it Vincent? We are running a bit short of time, but just to let everyone know that this webinar is being recorded and it will be uploaded to YouTube in about 2 to 3 days time. Okay, but after that, if not, Vincent, you can always PM your agent or any of us. All right, we can go back to the slide because we are really running short of time. Okay, let's go now. And now we're going to the Northeast region. All right, Northeast region, there's 19, 20, and 28. There's 3 districts here, so I'm going to help Sean to cover District 19. So District 19, we already know that this is the most popular in terms of transactions, all right, in Singapore. So let's take a look at some of the highlights. So if you're not familiar, this is the northeastern part, and of course, in terms of size, this is also the largest, right? So the main components or parts that makes up District 19 is Serangoon Gardens, Covent, Paya Lebar, and Hougang, all right? So just a quick snapshot on basically the transaction volume. Nothing surprising. This minus 50% is on in tune with the average. And you will see that the value has actually increased by 15.5. All right. Now, the 3 main things that we have identified in District 19 last year. First is you can see that there's a sharp rise, quite similar to actually a previous districts like 15. All right. The sharp rise in the more than or higher than $2,000 per square feet transactions. If you can see here. This used to make up about, this is about more than 40 plus 45%. Okay, sharp rise basically on this side. And you can also see in terms of the decline, can you see those at the top are declining actually a lot more? The ones that decline the least are actually the higher value ones from basically 1,006 PSF and above. And a surprising increase was actually more than the only price category that shows an increase is more than 2,000 per square feet. Instead of declining, actually shows a 65% increase. Okay, so another reason, if you can take a just to show you the example of some of the median. All right, if you compare basically last 2 years, the median more than $2,000 PSF transactions. Basically, we take all the more than 2,000 and take the median one. So in 2021, this is what you probably will get. All right, about 2,078. And in last year, 2022, you can see the median price has gone up to almost 2,002. Of course, there's a difference in terms of the house, so-called how new the house is. First one, this one at Pohart is really quite new. That's why it achieved this kind of price. And then you have also a lot more newer houses that contributed to the increase. All right. Next is an unusual decline. If you take a look at just semi-Ds, all right, total semi-Ds has the average has increased by 8.1, but the only area actually, in fact, almost island-wide, you see prices across all sectors area increasing, except for Covent semi-Ds. Okay, Covent semi-Ds. Why is that so? From average price of 4.4, now it's less than 4.4. PSF of 1,250 now is almost at 1,002. So we go a bit deeper. This is what you see. The main reason is that more 99-year semi-Ds sold in Covent in this year. All right. So in 2021, there's only about 5%, but in 2022, you see about 20%, almost a 4-time increase in terms of percentage. Okay. One of these reasons, of course, people wanting it could be 99-year terrace upgraders going for semi-Ds, or people wanting more space for basically more value for money. Right. So there are also lower record prices in 2022. So same reason for why it contributes to semi-Ds. All right. So this in 2021, these are basically all the record price. But in 2020, so they are about 1,008 and 2,000 per square feet in 2021. But last year, the highest semi-D actually transacted in Covent is 1,006 and 1,008. Okay, 1,006, 1,008. Again, it could be due to the appetite of terrace upgraders, but it could also due to the fact that houses, so in 2021, then they were generally newer, right, than those in 2022. Now, the third reason, also third highlight in District 19 is that there were larger detached houses sold. Okay, so you can take a look, and for this detached house in District 19, okay, there's an increased price of 2.9%, 2.5%, which actually compared to the average is relatively low. So you can see that the price average has become from 6.5 to 7.8, but yet the PSF is a lot. Increase is actually much smaller, 2.5 versus 20%. Okay, so same for, you can see Paya as well. This actually has a reverse in terms of the value. So the main reason is that the average size of the detached sold, okay, has actually increased. Okay, so you can see the increase in the value. Now it's about 7.8 million. And because of the size increase from 5,007, now the average size of a detached sold in District 19, okay, is increased by about 20% at 19%. Okay, this has caused, therefore, the disparity in terms of PSF and average price. All right. If you have questions, feel free to come in. We see quite a lot of questions this time around. But we move on now to District 20, and I'll pass on to Sean.
Hi, thank you, Willie. Yeah, so I'll quickly cover through District 20. District 20, for those who are familiar with it, actually this district is actually quite interesting, whereby it's actually covered with many schools, Aitong Primary, Catholic High, etc. And it's also very close to a lot of nature parks. So how we categorize them is actually based on also the volume. So for example, Sembawang Hills, we have clumped it together with the Casuarina Estate. Thomson Ridge, due to the lower transacted volume, we also lump it together with Windsor and Soochow area. Right, so in line with the new regulations for the schools admission for primary school, we actually see this trend for a very sharp rise. In fact, Sembawang Hills has leaped to above 1,009 on average for their terraces. So definitely this is something that for those who are looking for placement for their kids, Sembawang Hills still remain a very attractive location. Right, actually we have one question coming in. How are the brand new houses for District 20? Right, District 20, actually, to be honest, for December itself, there's only 2 recorded transactions. This is highly unusual. So one of it actually we'll be covering on the next slide. Okay, so this is a breakthrough. Never before have we seen a brand new semi-D in District 20 crossing the 3,000 per square foot mark. Right, again, this is on paper value, this may be a shocker, but actually diving deeper into it, you notice for District 20, there are certain pockets of landed estates that are actually zoned for 3.5 stories. So a house like this, actually, this was sold by one of our teammates. You look at the built-up size as opposed to the land size. So spanning 3.5 stories, such rare plots within District 20, definitely the built-up will matter in their asking price. Right, so would this trend continue? All right, so Thomson Garden, sorry. So this is where Jalan Istin is, very close proximity within 1 km to Aitong, Catholic High, Raffles, and of course the Thomson East Coast Line. Okay, so similarly, we see a rise in the quantum, what I coin as a quantum leap. So in the past, those who are looking for below 3 million, in the present, there are many units that are transacting below 3, but on average, these land sizes are in the 800 to 900 range. Okay, I'll quickly jump to District 28 due to time constraint. District 28, actually, we are covering a span. We have split it to various sections. Again, for District 28, certain areas have more traction because, again, for their latent land value. So, for example, Gerald Marlingston is a 3.5 story zone. Jalan Kayu is a more distinctive. Certain parts are only semi-D zones. Right, so what's interesting, for a long time, we have been actually riddled by some of the spikes in the PSF value. So for this quarter, not only we see a lot of transactions from the past from Lexus Hills, from Belgravia, we also saw and captured some from Poland collection. So most of these are, some of these are 99-year leasehold. So Poland, actually, they are transacting above 2,000 plus per square foot. Okay, so this value, although there's a very sharp rise, again, these figures, I think more than half are transacted from Poland. Okay, and what's the new trend we have seen since COVID is definitely on the move-in condition. So time and costing is a rather big issue for most upgraders. So houses like this, although it's located in Jalan Kayu area, this resale unit actually crossed and surpassed some of the other more popular areas like Luxus Hills. So example, the homeowner actually rebuilt this in 2012, and the quantum actually remains pretty attractive. But do note on the land size, it's only about 1,003. Okay, so again for Jalan Kayu, although we see the average PSF, although it didn't rise a lot, okay, because again, houses like this for that small area is actually quite limited. Okay, another trendsetter, it's for the semi-detached in District 28. Again, Jalan Kayu came up because they have the largest jump in terms of not only the value, but also the PSF. So for some of the homeowners, actually, they are on the edge of thinking, should I upgrade? Should I rebuild? Actually, these things, if they are done well, in fact, they can stand the test of time. So something like this has been rebuilt in 2010, and to date, it's actually able to fetch such a high PSF in relative to actually the area surrounding it. Okay, with that, I will pass to Will to cover Central.
Good evening, everybody. Thank you, Sean. Yeah, so I'll be covering District 10 and District 11. Let's dive into D10 first. So here are so D10 is actually divided into 5 sectors: the 6th Avenue, Bukit Timah, Tanglin, and of course the Holland, and a small little pocket over at the Jana Anrak, quite close to the Orchard area. So by the way, D10, Bukit Timah as well as Holland are well known for this educational, including the D11. So right now, you can see a significant increase for GCB crossing the $2,100 mark. Yeah, so 2,100 PSF mark. Okay, so far we're going to show you some couple of examples. For example, Leighton Park. We got a semi-detached house, a GCB that actually transacted at 34 million at 2,292 PSF, as well as a Cornwall, which is one of the featured in the H-Prop magazine previously, has also changed hand for a 14.5 million. With PSF worked out to be somewhere 2,516. Next would be the White House Park. This house at the back was actually a sunken ground, but again, it managed to achieve 45 million with a high PSF of over $3,000. Yeah. Next, sharp increase in terms of based on the weightage of more than 2,100 PSF. If you look at the year 2021, okay, that was about 30%. But whereas coming to year of 2022, there's a significant increase of to all the way to 55%. Yeah, compared. Next, we're going to show you the highlight is actually this 99 years. Okay, 99 years, as you can see, has increased drastically, as I stated out there in the wording. So, and of course, plus the price. And this is one thing that's mainly contributed by the leasehold semi-D, okay, at Victoria Park Villa, which is built, or the lease start from the year of 2013. Average price there was about 5 million and has crossed the $2,000 PSF mark, yeah, as high as $2,300. Yeah. Next, we're going to dive into District 11. District 11, again, we have segregated the place into Swiss Club, Diamond, Novena, as well as other some of little pocket, such as the Lornie area. Okay. So, as you can see, there's a sharp increase in terms of PSF with more than $3,000 PSF. Okay, which is as much as a 400% jump. These are mainly contributed by the new sales of mainly by the new sales. Okay, be it terrace or semi-D. Okay, over there, they one of the houses that literally transact at 3,800 over dollars PSF. Next, the sharp rise in GCB, as Billy had mentioned earlier, for District 11, there was a significant increase of 200% compared to the year of 2021. Yep. And lastly, the average price for Semi-D, there's actually a sharp increase in Semi-D, especially areas in Novena area. You can see previously in 2021, it was hovering about 5.5 million on the average. And today, that was as high as 42.5% jump or increase that come to a new price of 7.8 million on the average, and a PSF of $1,800 in the year of 2021. And today in the 2022, prices has went up as high as $2,200 per PSF. This is mainly contributed, as I mentioned, we have also leasehold Semi-D that is being sold within the Novena area at only 1,005 PSF, at only $1,500 PSF. But what caused the price to increase is actually a bigger plot of land over at Gilstead and Buckley, with land size more than 6,000 and transact more than 14 million. Yeah. And lastly, the height in PSF, okay, is mainly contributed by the newish, so-called those that is built recently and the brand new houses. Okay, prices are ranged from $3,080 all the way to $3,400 for PSF. Next, I will hand over the airtime to my colleague Cedric that will elaborate more on the west side of the area. Cedric, please.
Thank you, Will. Hi, my name is Cedric. I'll be going through the West Region districts, namely D21 and 23. So let's get the ball rolling. Okay, let's dive into D21 first. The three main, okay, first, before we go to the three main highlights, these are the cluster of houses. We have divided them into, you've got Jurong Kerchu area, we've got the Toei area, Sunset, and then the Upper Danyan cluster of houses. Okay, these different regions. Okay, first, the highlight for D21 is true to its form, true to its consistently with all the other district there's GCBs. There's a rise in their per square foot lah. So GCB being the houses that are affordable to those of an upper echelon of people. They are not that affected by the drop or economical factors. So you realize that even for D21, those who doesn't mind less prime, but still within Bukit Timah area, the Upper Danyan area, the per square foot has still increased quite significantly of 35%. Okay, so this one is consistently for the past 2 years now. The next highlight I want to point out is the cheaper houses brackets have moved up a notch. So if you look at this table over here, the houses that were transacted in 2021 within the 2 to 3 million range, there were about 11, and yet last year for 2022 there were only 1. So that actually tells a story. That means houses prices have really moved up a notch. As you can see also, even the weightage of the houses is inching towards that direction. A good example is, so this one you can see here, this was the only house that was sold in 2022. The only transaction within 2 to 3 million range. Okay, sold at 2.45 in February. Okay, whereas as mentioned, the year before there were actually 11 such transactions. Okay, the next highlight I want to bring up is, okay, detached houses are actually hitting prime Bukit Timah price points within 21. Will this trend continue? Well, of course, we will find out. A lot of it has got being the close neighbor of D10. and even D11, the prime Bukit Timah area. There were kind of spillover effects whereby, you know, you can see that because this popular location, Sunset, Upper Danien area. Upper Danien comprised of like your location like Sian Tuan, Hua Guan area, but still very popular, still so-called Bukit Timah area. Not the prime Bukit Timah, but then yeah, it's still Bukit Timah area. You notice the detached houses were actually in last year transacted around 12-11 mil range. That was something you would be able to buy within prime Bukit Timah the year before, 2021. Of course, today to prime Bukit Timah area, detached houses has climbed up a few notches already. So so those that still only have budget within this range, they wouldn't mind moving further a bit to Hua Guan, Sian Tuan area, or even Sunset area that is close to Holland, to look for their ideal detached houses. So these are the three main highlights for D21. Okay, next I will go to D23. Here are the cluster of houses for D23. We've lumped the Burgundy and the Verdi cluster together, though they are very far apart. It's because these are all the 99-year leasehold enclaves. Or the rest will be Hillview area. You've got Chestnut Cashew area and Choa Chu Kang. Okay. The first highlight, interesting trend for 23 would be the 99-year terrace houses setting new benchmark. Okay. You look at Verdi, the whole cluster, Villa Verdi, yeah, the whole cluster of 99-year leasehold houses. Gone are the days you can find houses below 2,000 per square foot. Sorry, below 2 million. 99-year leasehold terrace houses. Okay, so for 2023, across the benchmark of 2 million, and the per square foot is also setting new highs at averaging 1,002 per square foot. Okay, so average quantum prices for 99-year leasehold terrace houses, yeah, have crossed 2 million and 1,002 PSF. So here are some of the examples. Okay, all the Verdi houses. You can see all of them have crossed the. These are the few examples that have crossed a 2 million mark and an average of 1,002 per square foot. Okay, next, same thing for D23. We have a cluster of GCB as well at Chestnut area. So there's also significant rise in GCB prices. As I mentioned, the reach to them, they are probably not so affected in terms of market movement. Those that do not mind further out location for the GCBs, although you know the most sought after is the prime D11, D10 for GCBs. But some who do not mind the western part to have their ideal GCBs, they will consider this area, and to them, you know, if they can afford, you know, they don't mind, you know, price is not perhaps the only consideration, I would say. Yeah, so that actually contributed also to the rise in terms of average sale value and also the PSF wise for GCB. Okay, so true to its form, true to its class, GCB is another league on its own. Okay, so the third highlight I want to point out is the price brackets are in terms of quantum, and PSF has also moved up a notch, or a couple of notches for D23. D23 being a district where a lot of people look for their first landed home. So it's interesting that, you know, it being a district with a lot of 99-year leasehold prices, so there's also still demand, and so versus the last year, yeah, those cheaper houses notice form the highest quantum are those on the range of where the price is as lower, under 2 mil to about within 4 mil range, forms the bulk of the houses transacted. And yet this bulk has likewise in 2022 moved up a notch already. So it shows the trend of prices moving for D23. Okay, likewise for the PSF, you can tell it's very significantly, you know, the PSF brackets transacted have moved up a couple of notches here. All right. So this is what I would like to highlight for District 23. All right, and now I shall pass the time back to Willie to wrap up for us. Thank you.
Thank you, Cedric. We have been receiving a couple of private questions here and there. Unfortunately, due to time constraint, we won't have time to answer or to attend to this Q&A. What I suggest, since there are many questions, please just type in the questions as openly as you can. Leave behind your number if you could, all right, if you don't have an agent representing you. If not, you can post the question to your agent, and then we will definitely get back to you after that. All right, let's proceed, because we are now coming to the very important question that a lot of people is asking. All right, I think I cannot emphasize enough how often this question will be asked, not just beginning of the year, but during the upcoming Chinese New Year. And before we share our views, I think we are very curious here, 6 of us here, would like to know, you as the audience, you as the viewers, what do you think? Do you think the property market in terms of prices will be better off or worse off than in 2023 versus last year? Let's see whether your views tally with us. We'll just do a quick 20-30 seconds, okay? Bearing in mind all the news we have heard, mainly negative, I will seem so, and also the sentiments that we've seen that brought us across from Q4 to now. Okay, so with now, you'll be surprised. Now I have a 80-20 here. You want to know on which side do the audience think so? Basically leaning towards. So about 80%, okay, I'll end the poll now. 80% thinks that it will do better, okay, in 2023. The question is why, I wonder. But let's share with you what we think, all right? So again, nobody has a crystal ball. I wish we could predict. I wish last year, this time, we would know which area would go up so fast, like what many of my district ICs have said, we could invest in one ourselves, all right? So, but obviously us being in the market a lot longer, a bit more experience, we hope that the following insights will be useful to you, okay? Now, before we go on, let's just take a quick recap, all right? Just 3 months ago, all right? Just 3 months ago, we shared the following. And if you could still remember those who attended then, when we talked about this, we were talking about more of the macro. There's one main part was about the macroeconomic and factors that's coming, all right? Which will have a dampening effect on basically the market. And that was, mind you, just early October. Okay, and also we emphasize a lot, and one of the highlights is about the macro environment, right? The macro environment. And what has happened now, 3 months later or 6 months later, is these 3 things that you can see in front of you now is something that is very, it's not new to us. We have been hearing this all the time, and a lot of us have suffered, so to speak, all right? Especially if you're a homeowner now, in terms of interest rate and inflation, all right? If you are living in Singapore. So I'll go quickly to this global economy. Global and local economy, interest rate, and inflation. Okay, so these are some of the headlines that you have seen. Recently, this is from basically as recent as January, we just got this basically today. All right, so a lot of people in the market, I think the sentiments is generally downwards, is generally negative. They are facing global, basically either recession in certain parts, eastern part of the world, western parts of the world. You don't see EU actually recovering basically from the various elections or their various challenges. And of course, you have the impending wars in Russia and Ukraine. I think that's giving them a lot of pressure in terms of energy prices, right, crisis, etc. So I think even in Singapore, we do not escape basically from this, even though I think we're one of the most lucky or fortunate, all right, city or economy in the world to actually still can be very proud or be very confident to actually post a positive growth. However, that has been forecasted to be reduced from, let me just go back, pardon me. Okay, you can see the Singapore GDP, versus 2021, that was actually a high. I think even economies were disappointed that we could not live up to expectations about 5.5. So we only hit about 3.8, and the forecast for 2023 is even lower. It's about 0.5 to 2.5%. Okay, still is a positive growth, and we hope everyone strive to, I think, achieve as high as that. But generally, you can see now what I have here basically is a range scale. All right, so to help us to understand what we have identified or how we attempt, I think, to understand and analyze this, is to identify 10 key levers, all right, 10 key factors that will affect positively or negatively the landed market in 2023. All right, so you have basically the lower scale on the left, that is basically a downward pressure, and then you have other factors that will elevate. So you have the economy, I won't elaborate further. Sorry, that's on the economy, and then next will be economy, is on the economy, and we don't think that will help in terms of the market. Next will be the interest rate and inflation. So inflation has hit us hard, okay, for 2022. In 23, well, the bad news is it's going to continue. The good news from what a lot of economists are saying is that it's going to taper off, right? It's going to taper off. So it depends on how you look at it, whether in terms of fixed rate, some buyers actually were fortunate, they have their low fixed rates actually carry on through to 2023. All right, but we are quite sure when we speak to bankers and look at the reports, most homeowners will not be able to escape, all right, from this high rise in the interest rates. So we have, although different expectations or forecast has been reported, like from economists is 5.2%, MES is 5.5 to 6.5, generally is at the high side. All right. What is interesting is there's a disparity between what has been supported by the professionals and economists versus Singaporeans' expectations on inflation, on headline inflation. All right. I think one main reason is as a result of this for the last 3-6 months, a lot of people, as based on the report, are expecting to actually cut down, right, in terms of their purse strings and also cut down their expenses. So hence there's a disparity, and they actually feels that this will be tightened further. As of December, it's going to be the expectations of 3.8%. Okay. So these three factors is the most straightforward. I think generally it's going to have a downward pressure, all right, on the landed market. Now, if you talk about, usually, by the way, in previous years, when we try to analyze the market, it's a lot more straightforward. It's a lot less complicated. This is the first time when we enter a year, or we end the year last year with a lot of uncertainty, right? Even for us industry practitioners, because besides these three factors, okay, which seems negative, because these three for certain things are not new, all right, are not new. And yet we've seen the market actually performing against expectations, performing against norms, especially in Singapore in the last 2 years. So what are therefore some of the other factors that are not your traditional levers? Okay, so with this, we've developed and decided the next view, all right? The next will be a cooling measures. Okay, cooling measures, again, not new, but let's just take a closer look at what happened to the market since then. Just pardon me, I may need battery, sorry. All right, so cooling measures, if you remember again, the last webinar, we concluded that cooling measures will have muted direct impact on the landed market in a very short run. All right, that was in October. But I think what we are concerned of is more the mid to long-term indirect impact, right, due to inter-segment influence, which we elaborated a lot in the last webinar. So it's been 3 months. Let's take a look. Okay, so if we are to take a look at basically the Q4 numbers again, bear in mind last year, if you take into account December 2021, where there's a rise in basically the buyer stamp, this ABST, all right, we actually effectively the whole year went through 2 rounds, right, 2 rounds of cooling measures. So unsurprisingly, the volume has been dropping, Q4 has been dropping, all right, but what we do see is that despite that, the value has still defied the norms and still continue to increase. Okay, by the way, the drop in the volume is also due to there's a revenge travel in Q4 as well. So this is actually quite within expectations. So can we say that cooling measures has really taken its toll, has really impacted the market, right? We personally believe that this is the beginning of that is the last quarter wasn't a representative yet. I think the varying effect of that is still going to come for the next at least 1 to 2 more quarters. Okay, so cooling measures, like it or not, is we feel is going to have an impact on that. Now you realize there's a different color here. All right, you notice that we have tried to differentiate them between the larger impact, the moderate impact, and also something that's maybe a smaller impact. So the orange ones we think will not have as big an impact as the global factors, but still it will be quite significant. Next will be the post-COVID demand, right? Post-COVID demand. We have enjoyed, of course, 2 years of unexpected surge in terms of surge in terms of the need to upgrade, the need to have a bigger house, etc. I think the 2020 and 21 is phenomenal in many ways that we can expect. All right. So if you take a look at this, this is last quarter. All right, at a transaction volume of 266, and in the last few quarters, you see all these are record high, right? Across, almost above 500 units per quarter. All right, what you see is this is already starting to taper off, right? Taper off to the 260, and you see before the COVID effect, most of the quarter 4, this is already adjusted for seasonality compared to the quarter 2 and 3, right? Adjusting for holidays, Christmas, etc., etc. This now we are going back to the post-COVID effect already. So do we expect this kind of past 500 per quarter volume and per quarter, especially in quarter 4? This is quite unlikely, right? Unless a certain abnormality happens in not just, I think, the economy, but I think the social behavior of Singapore. Okay, so we feel that this post-COVID demand means if you want to expect the kind of demand, the kind of surge in the last 2 years is quite unlikely, right? So now we have almost 5 factors or 5 levers that seems to be actually depressing what the outlook is going to be. Are there more to come? All right, what are some of the bright sides? Okay, first one is construction and supply chain costs. All right, or construction costs due to basically all the delays in supply chain. We have heard many times about how the costs have increased, not just because of inflation, but directly due to construction. The good news is this year we've heard less complaints, all right, from our builders. Yes, of course, a lot of them was just say, sorry, price very high, therefore I need to charge this to build this house and stuff. But if you read on further, generally, I think this supply chain constraints and all the factors are easing, all right? That has actually resulted also in the prices of many, many raw materials declining, right, quarter on quarter. Of course, they're still at a high compared to pre-COVID periods, but these are all good signs of easing, all right? You can also see the headline here, so construction cost is going to be stable. And in this year, 2023, with, of course, a quite healthy backlog, right? What they have is, yes, they don't have enough manpower and stuff, but I think there's a lot of backlog to keep the construction sector a lot healthier. What is good is that there's no longer the kind of high cost pressure that we used to face then. Okay, so this we think will have, because there has always been this additional pressure on the demand as opposed to the cost. So this will actually be one of the bright sides. Okay, now next, okay, will be the rental market. I think a lot of us, I hope there's no tenants here. You might be a landlord here. I'm sure last year was one of probably the best surprises or the best years ever for landlords, right? We see rental market across all sectors, from HDB to condos to landed, going up, right? So reports like this are not new. It has actually showed that it has gone, what is reported in the market is more than 20 to 30%, but we have seen it's not alarming. Some have gone up by 40 to 50%. Okay, now this is the first time we are showing a chart on landed property rental. We always analyze the sale and purchases, and this is the first time we can take a look, because this will have an impact, all right, in terms of rental. We can see rental market basically on the bars, more or less for the last many years and many quarters, the volume is more or less stable, right, from quarter 1 onwards. But you can see that the rental market has increased substantially, almost quite similar to as a reflection of the rise in prices. Now, what does this mean, I think, to then the landed buyers and sellers? Imagine you are a landlord or you are owner of a house. What used to be the price, let me see whether there's a number here. Imagine if it's just 20%, right? If you have a detached house that used to rent it out for $10,000 and now you can fetch 12,000, will you be more inclined or less inclined to sell it? Okay, bear in mind, a lot of these houses have been owned and rented out for many years. And when rental becomes more and more attractive, it becomes less and less attractive for the owners who want to give up. So it's quite simple. We have had quite a number of owners, sellers, when we approach now, but this year the market is good. I myself just rent. Since the rent is good, I've been renting, and since the price is going up, right? So the only way for them to stimulate the sale or the motivation to sell is to expect a higher price. So rental market, especially last year, and we believe this year, is going to have a more direct impact on basically the sale and purchase market than we expected in the past. Okay. So we saw the 20.3 or 20 to 2023, if I'm not wrong, for basically condos, all right? But for landed, what the numbers have shown is this is actually higher. The increase in rent is almost 1/3, 33.7%. Okay. So that was. Pardon me, the screen is freezing. What do you think, therefore, will be the projection for this year in terms of rental? Right, there are several parties or sources that say that I think market rents is going to ease. All right, but I think Bloomberg has just, again, this is just today, right, 16th of Jan, have actually projected that private home rents is going to climb by another 10 to 15%, right, on top of a record high last year already. Okay, so this is going to give more pressure or more motivation for actually sellers to keep their properties. Right. The next factor is new condo launches. Of course, you're asking, really, what has this got to do with landed, right? Bear in mind, if you look at the last webinar, every movement, all right, or every effect on other segments are closely related, are closely or interrelated, whether directly or not. So new condo launches are going to surpass this year. I think last year there was only about 6,000 plus was without EC, with EC is probably slightly less than 10,000. And this year is going to hit more than 10,000, 10 to 12,000, what is projected, all right? With new condo launches, it means that new prices are going to be set. There are a lot of record high prices set in terms of the GLS and also on, mainly on the GLS. And what this means is that for comparative wise, for example, a new launch of a 4-bedder that used to cost, say, 2.8 million, for example. So new launches, more and more new launches will therefore, let's say it's launched at, let's say, 3.2. This will make, I think, people want to compare with an alternative of buying a landed property, especially the 99 years, especially cluster houses, all right? So having new condo launches will help to pull up this aspirational gap, right, between a landed and a non-landed property, okay? And something to take note, if you read closer into this, is that the proportion actually of the launches this year are actually going to be higher in the OCR and the RCR. That means less in the core central area. And the OCR and RCR is where the majority of landed properties are located, which means that the less launches, let's say, in the core central area, but the rest of the areas where majority of the, let's say, the terrace and the terrace will be affected more. Okay, so we feel that all these new condo launches are healthy signals, and of course, it's all dependent on their take-up rate, right? Take-up rate, whether it will affect the direct effect on landed properties. Okay, next will be what we feel is this influx of foreigners. I think if you have friends from, let's say, China, you will have already known since 2 Sundays ago, I think they are the happiest citizens on earth. All right, they finally, after 3 years, so-called lockdown, they finally be able and released. That means in terms of the restrictions to travel have been eased. So you will start to see a lot of foreigners, right? Influx of foreigners. Actually, this has started since, I think, Singapore loosened or relaxed the COVID measures, right, and encourage traveling since 3rd and 4th quarter of last year. The only citizen or the only country that has basically been stopped is the Chinese. And already you start to see a lot of reports on Chinese home buyers gradually returning to Singapore. Okay, why Singapore? I think, as the world, world is being drenched in a lot of so-called challenges, I think the bright spot in all of this is actually Singapore. I was traveling recently, and a lot of people are so envious of how Singaporeans and the government has actually helped the entire society, entire economy to actually survive this 2 years period. Because everywhere else prices are dropping, there's no actually positive so-called light in sight. All right. So, and of course, in terms of how Singapore has managed to maintain and keeps Singaporeans safe, and of course, the future prospects of the economy, and has actually encouraged a lot of people to return to Singapore, foreigners to return to Singapore. All right. So this may not be as direct an effect, because you can say this, they will not be able to buy landed properties per se, but like I said, that's actually over so-called flowing effect. If they start to buy new launches of condos, it means more capital injected into the market, and some of these will eventually flow over to the landed property market. Okay. Last but not least, okay, is the en bloc phenomenon. Now, this is something a bit more debatable, because you can see that the last few attempts on blocks in the market, the last 3 months especially, has not been very successful. But that also means that despite actually the lack of successful en blocs, okay, in last year, the lender market still grew. Now, what's the implication of this? Because in the last en bloc so-called revival in the 17 and 18, we actually see a lot of flow over into the lender market. An example will be, if you remember, Amber, in District 15, I would name the condos. Okay, there are a lot of District 15 recipients of en bloc. They are getting between $3.5, $4.5 million. With that sum of money, instead of buying a condo, new one, and bear in mind that they are used to staying in very big properties, big condos, big units. So a lot of them actually decided to then upgrade into their lender. So the en bloc effect, especially for en bloc developments that's big units, will have quite a substantial flow effect into the lender property market. All right, so we do not expect this to hit a new high. As this report I say, there will be quite a lot of challenges due to many reasons. But if it just remains constant and to hit a certain rate like before, I think this will help to actually elevate and push demand into the lender market. Okay, with all these factors in, of course, it's difficult, right, for us to determine what is going to happen. The biggest question now is, with all these factors, which is going to have a bigger impact, and which direction will they go? Bearing in mind that we're still at the beginning of the year, a lot of this, even for interest rates, and the obvious ones, interest rate inflations, nobody knows what's going to happen, not just end of the year, but even 3 months later. All right. But with this, I think as a team, like what we have always, a lot of you are asking here for our comments and our so-called prediction. All right. After comparing all these factors together, we are confident to actually give a forecast that the transaction volume is going to drop by 20 to 30%, right? 20 to 20%. Main reason is because of all the rate parts that you saw over here, and it's just that I think for us to achieve the same kind of volume that we have the last 2 to 3 years is quite likely. And the fact that falling back to the norm of about 1,003, 1,005 units, that should be the norm. And for value-wise, despite all the challenges, I think the team here, we believe that the value is going to increase, continue to increase, all right? Although the increment is going to be moderated. If you realize that both the volume drop and the value increase is going to be moderated this year. So a single-digit increase of about 4 to 6% is what we predict is going to happen. All right, it's going to happen. So we hope, of course, any of these factors is going to change. That is why every quarter we have to analyze. We have to also study and then come back and share with you again what are some of the findings and whether any of these factors would have a more adverse effect than expected. Okay. So despite all this, I think the main advice that we will give, you realize this weighing scale here. You know what is the most important part of it? Is actually right in the center. Okay, the pivot of this weighing scale, regardless of what happens, whether there's 10 factors or there are more factors, all right, detrimental or otherwise, right, is the core, and which is your needs. Okay, your needs. Whether you are a buyer, you are a seller, whether you should buy or sell a landed house, very often it may not be, from what we have seen, it's usually not dependent or not affected by whether the market is going up or down. You buy or sell because of your needs, whether you need a bigger place, whether you need to move closer to get a school, maybe you need to downsize because of your health needs, for example. I think this should be your main deciding factor, right? Your main motivation for making the next move, rather than being too concerned about how the market is going to move, right? So we have heard already for some people, even if, for example, it is a plus of 5, 4 to 6%, you need to move now. If you weigh the pros and cons of basically waiting, then you will know if your needs surpass what the changes in the market, then take the move, right? Then take the move, whether is it going to buy or is it going to sell, all right? So this is our best advice to you, because it's something that we've seen over the many years. Especially if you're a buyer, if you're concerned about prices going, it's going to dip. It's not going to dip a lot, let's say for certain areas, right? But generally, in the long term, landed property prices is going to rise. Okay, same for sellers. If you need to sell now, despite that, then you have to downsize. Go ahead, right? Do not let, I think, market forces or overly dependent on market predictions to decide your next move. Okay, speaking of which, I think the important thing besides that, you also have to have a much better understanding of the market. If you just take a look at this, are just some of the houses that's on sale in the market now, of course, by our team. Just one look can tell, even though some are semi-detached and detached, you realize every house is different and every person's need is very different. And your purchase decision will never be determined by because of a 1% increase in terms of the direction of the market. All right. So bear this in mind when you make a decision, and look inside, discuss your family and discuss your needs. All right. And of course, take a closer look at the houses that's available. We come almost to the end. Let me just do a quick conclusion. All right, we have in the first part concluded that based on 2022, that the transaction volume has increased by 12.8%. Volume has declined by almost half, 47%. Terrace led the value growth, 13.9%, whereas detached declined the least, right, by minus 53%. Now, in terms of transaction volume, District 23 declined the least, has the best improvement, whereas District 21 declined the most. Value-wise, District 21 grew the most, and District 10 and 23 the least. Pardon the typo error here. Okay. So we also shared the 10 key levers that will impact the landed market in 2023, all right, which I expected to. And there are some that will be that will have a negative effect, like your economy, inflation, interest rate, etc. And also some which we think are the bright spots. Okay, I think these are really the high potential tailwind that could drive the market higher. Some of these are the stabilizing construction costs, strong rental market, influx of foreigners, etc. Okay, and so what's going to happen? I think we should really start to experience even this week or this last 2 weeks is that more sellers have seeing that this is actually at the peak or reaching the peak, okay, at least in the short term, are likely to enter the market. What this means is that buyers will have a lot more options, right? A lot more choices. It doesn't mean that you may get like value buys, or at least it will be better than last year, not just entering the market and you have 2 to 3 houses that's available, all right, in that particular area that you like. So this means that I think the market will start to, in terms of the balance of the power between buyers and sellers, is going to start to tilt a bit to the buyers. Okay, so summary of our forecast, we think that the volume is going to decrease by 20-30% and value by about 4 to 6%. Again, we're holding our fingers, and we're going to monitor this on a month by month, if not quarterly basis, all right, and share with you the next forecast. Very importantly, sellers, buyers, please make your next move based on your needs, all right, based on your needs, based on your preferences, rather than market conditions. And like we always advocate, I think a much deeper understanding than what the last 1.5 hours has been shared with you is required for you to make this very important decision in your life. Okay, so we're now to the end, I believe. No, we have crossed the 9:30 mark. If there's any urgent questions, maybe you can answer 1 to 2. Let me see. Any questions that any of you want to ask now? Just to answer some of you have asked questions on other districts, all right? How about District 8, for example? Again, I just say you can leave a number. If you don't have numbers, actually, we can dwell further. Also, there's one question on District 16 as well. Can you separate the 99 versus the freehold? It is true. There are some districts like 16 that has quite a high proportion of 99, which may distort the value. You are right, all right? But we can drill down further to just show you the freehold and the 99 and separate it together. But with this, we can't show it here. So just either go to your agent who can then contact us, or you can go to, I believe just now was Vincent, I can't remember the name. Just contact the district IC or me directly, all right? Okay. If there's no further question, please help us to do a quick poll and let us know whether you find this webinar useful. Pardon us for exceeding, because it's a very important. Normally, our first webinar of the year will always exceed, because there's a lot more analysis to dwell into, and also a lot more to share, all right, for not just from me, from my entire team as well. Okay. Thank you so much for your input in this poll, and of course for your time. All right, so again, this is more information on the team. This webinar will be recorded and uploaded to our YouTube channel in about 2 to 3 days time before Chinese New Year. All right, so if you need anything, you can revisit this, screenshot some of this information, or contact any of your Huttons agent or Huttons landed consultant or HLD consultant. All right, with this, I shall sign off. My name is Willie once again, together with my team here. We thank you for your attention and wish you a very happy Chinese New Year ahead, celebration ahead, and of course, have a happy and healthy year ahead. Thank you very much.